When I ask people what they think that their biggest expense is in retirement, what do you think they tell me back? Well, a lot of them will come back and share with me, well, it's probably some sort of a healthcare of an expense. But in reality, what it usually is taxes. It poses the question, how do I go about in retirement developing some sort of a tax plan that's going to help me minimize the taxes in retirement? In reality, you have assets like your IRAs, your 401ks, and some of you have 457s. You notice how so many of these accounts have tax codes attached to them? That's because most of them have never been taxed yet. So your contributions that you made into these plans, those were all done pre-tax. And then they had tax-deferred growth so that when you begin to pull the money out of those accounts, those are all going to come out and be taxed as ordinary income. Then you have post-tax. Post-tax is, hey, I've already paid the taxes on the account, but it's sitting out in a taxable environment. And so as it grows, I'm probably paying taxes on the growth of those accounts. I may not even be using those accounts. I may never use those accounts, but yet I'm paying taxes on them as they're growing. And then we have what we like to call just tax-advantaged accounts. This is where like your Roth IRAs would be located at. Life insurance cash values, municipal bonds. So we've already paid the taxes on these accounts when we put our money into them, but now they're getting to enjoy tax-deferred growth. And if handled and set up appropriately, then the monies come out tax-free. Most people, especially when they're coming out of maybe a corporate environment where there was heavy funding going into 401ks, most people, their assets, the biggest portion of them are located over in that pre-tax place. When the income is coming out, we're going to get hit with ordinary income tax rates on those. And those are the ones that everybody's concerned about. What's the future hold for taxes? We'll just share with you that taxes are on sale right now. That environment right now is going to go away the end of 2025. The current tax code sunsets the end of 2025. We have this window of opportunity right now where we can go through and develop a tax managed plan that's going to have a big impact on the rest of your retirement. It impacts so many other areas of how your income is going to get taxed, how your benefits, the premiums that you pay. For example, your Medicare premium that you pay, the Part B, it is attached to your taxable income that's coming into you. So when we're looking at taxes, and taxes specifically in retirement, how is my income going to get taxed? How are the assets that we have going to get taxed? We have different tax rates, ordinary income tax rates, capital gains tax rates. How are we going to make the best use of these different tax rates so that we can go through and have a tax plan that's going to minimize the taxes in retirement? The whole idea of having a plan is that when you enter into retirement, you can retire wise and make wise decisions about your taxes, along with your investments, along with your income. We can help you go through and develop a tax managed plan that goes through and minimizes the taxes on the income that you're receiving and these assets that you're holding, minimizing the taxes on assets that you're not even using. That requires a tax plan, and that is something that we can come through and help you with.